Let's take a look at the project for Accounting 230. Here we are with Premium Pooch Palaces. It's the same name, or similar name, to what we did with Accounting 102. However, this is where we're the manufacturer, not a merchandiser. And this is Premium Pooch Palaces, manufactures pet houses, dog houses. Okay, and they have a whole bunch of variety of different styles, and some that are for indoors and some that are for outdoors, and they have comfy furniture and decor in the dog houses and all kinds of new and innovative stuff that people like. We're only going to work with 3 of their dog houses for this project. Okay, their finished products are sold to department stores, specialty pet shops, discount outlets, boarding kennels, etc. And so again, we're only going to pretend that they have a few customers and a few vendors and a few inventory items. Okay, their accounting system includes of a general journal, a general and subsidiary ledgers, and a cost accounting forms. In place of the general journal and general ledger, we're just going to use T accounts. So we know that T accounts is not GAAP. So, but in this case, we're more concerned with the subsidiary ledgers. So there's a ledger for each material that goes to the materials T account, where we have ledgers that are the cost job cost sheets that are the subsidiary ledgers to work in process, and we have the finished goods subsidiary ledgers that are for finished goods T account. So those are the primary interest here. So rather than having you do journal entries and having to post them to the general ledgers as well as the subsidiary ledgers, I am mainly focused on the subsidiary ledgers, and in place of journal entries and posting to the general ledger, I'm just having T accounts. And we all understand that T accounts are not GAAP, they're not considered real books, but we're just using them in place of those books for purposes of this project. Also for purposes of this project, to save time, etc., I'm only focused on the T accounts for the inventory related accounts. So if you purchase materials on account, we would normally do a journal entry where we would debit materials and credit accounts payable. And then those would be posted from the journal to those 2 ledgers. And then we'd also have to post to the accounts payable subsidiary ledger as well as the materials subsidiary ledger. Well, rather than having all of that go on, I have a T account for the materials, and you'll put the debit in that T account. You will also have to do the materials subsidiary ledger. But I don't even have a T account for accounts payable. So obviously, once you're done, you're only going to have this debit in materials, and you're not going to have a credit for accounts payable. So your debits and credits are not going to match. I don't give you a chart of accounts with a bunch of accounts and with their beginning balances and everything. So that means the whole point of a trial balance is for you to be able to make sure that your total debits equal your total credits. And if you have a posting mistake, you can find it. Now with trial balances, without being able to do a trial balance, if you make a mistake and you accidentally put that debit to materials into a credit, okay, then there's no way to see that you have a mistake. So that means you're going to need to be careful when you're putting stuff into the T accounts. Be careful what you're doing. Pay attention to what you're doing. Okay? Now, I give you some blank T accounts you can use. But if you want to make your own T accounts, you're welcome to do that. You will need some accounting paper for the end of the month. There's an end of the month cost of goods manufactured schedule and an income statement. So those two things will need to either, if you do them manually, they'll have to be on accounting paper, or you can type them up on Word or Excel. Okay? If you are physically giving me those things, they need to be in a folder. Okay. If you are giving me those two papers that were talked about up here, they need to be in a folder. Your name needs to be on them. The subsidiary ledgers are on Excel, and they must be delivered to me as an Excel file, okay, not as a printed out thing. Okay, copying is not allowed, and I look at every single line. I can tell if you've copied from someone else. Okay, the June transactions have been put into T accounts and subsidiary ledgers. So I give you all the June transactions, and I also give you the subsidiary ledgers, the T accounts for June, everything, so that you can follow transaction by transaction, how is it done in June. Then in July is the one that you need to do, but you can refer back, well, when I purchased materials back in June, you know, where does it go, okay? And so you have that to look at, okay? So you're going to submit the T accounts, which I give you some blank T accounts on Excel, but you don't have to use those. If you want to do T accounts by hand on paper and submit those in the folder, that's fine. You got your materials ledger, job cost sheet, finished goods ledger, and overhead analysis sheets. Those are all on the Excel subsidiary ledgers that must be handed to me in Excel. You have your cost of goods manufactured schedule and your multiple step income statement, which needs to be typed on Word or Excel or handed to me on accounting paper. Okay, this section here goes through the various subsidiary ledgers. Okay, when we receive, when we purchase materials and we receive them, okay, those are coming into the materials account, so that'll be a debit into the T account, but we also have to go to the materials ledger. When we use materials, that means we received a requisition showing what we needed that's coming out of the material storeroom and going onto the factory floor. Okay, that's going to be credited to materials, and we'll also have to put that in the materials subsidiary ledger, and it's going into work in process. It's also going to have to go on to the job cost sheets. Okay, the overhead, anything that goes into overhead on the debit side, that's the actual overhead costs, including indirect materials and indirect labor, depreciation, insurance, etc., all those overhead things. Then we also need to put that on the overhead analysis sheet. Now, the overhead rate that we're going to use has already been calculated for you. So at the end of the month, when you credit overhead, you don't need to put anything on these overhead analysis sheets, just when we actually pay for the actual overhead. This talks about the job cost ledger. That's the job cost sheets. Okay. And there's various jobs that some of them started in May, some of them started in June, and we got 2 jobs that we're going to start in July that you'll have to make up the job cost sheets for. Okay, when a job is completed is when you fill out the summary information on that job cost sheet. When we use materials, when we have direct labor, or when we apply overhead, we're going to be debiting the work in process T account, and we'll also have to put that information onto the job cost sheets for the particular jobs. When the job is finished, okay, we have to summarize the information on the job cost sheet. That will show it as being zeroed out. And we have to credit the work in process, and it's going to go into finished goods. We're now, once it's finished, we're transferring that job out of the factory floor and into the distribution center, which is the finished goods T account relates to the distribution center. Okay, this finished goods ledger consists of stock ledger cards and job ledger cards showing the posting through June 30th. Okay, so there are 2 types of transactions with finished goods. One, when we receive the finished items from the factory floor, that's a debit. It's coming into the distribution center, so it's coming into finished goods T account, so it's a debit. Then when we actually ship those products out, it's coming out of the distribution center and getting put on a truck or ship or whatever. We're shipping it out, and so it's going to credit the finished goods T account. Now we also have finished goods subsidiary ledgers, so as they come in and out there, we also have to put them on there. This talks about the departmental overhead analysis sheet, which just specifies the actual overhead costs. We don't have anything about applying overhead on this overhead analysis sheet. Here starts the transactions of June 1st through June 30th. And you can see they have a couple pages of transactions, 3 pages of transactions. And then here's the end of the month for June, okay? And it tells you what to do each step of the way, okay? After that, there is the July statements, transactions. This is what you're going to work on. Notice they look just like the June transactions, and then here's the end of the month stuff for July that tells you what to do. So these are your project. This is the project narrative that you're going to use to do this project.